Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, September 29th, 2018, and we've got the weekly market update. So first things first, uranium news. Lots of interesting little tidbits that happened in the last week. I think one of the main pieces of news that was of interest to me was the fact that Cameco beat out the Canadian Revenue Authority case that was overhanging the company. I'm not going to get into it. You can go look at the press release, but suffice to say, the Canadian Revenue Authority, which is basically the IRS of Canada, had a claim against Cameco for some unpaid taxes. They were actually fairly substantial, I believe in the hundreds of millions of dollars. But court threw that out, and it looks like that's positive news for Cameco, as that was a major overhang on the stock. As you can see, the stock popped about 16% on the news, and I think this de-risks Cameco going forward from that situation. I'm also going to go say something right now that I think is probably going to aggravate some people. I believe for the average investor or the average person that's getting into uranium, I think a position in Cameco as basically one of the largest uranium producers in the world that actually produces uranium, that actually trades uranium, that actually garners revenue from uranium. It should be a cornerstone of your, or a foundation, if you will, of building your uranium-themed portfolio that you're looking to take advantage of this uranium bull market. Now, I do not see Cameco going up 10 or 20 times or 8,000% or 10,000%, whatever, during this bull market, but it could very conceivably go to 50, 60 bucks a share, and that'd be a 4 or 5 bagger from where it's at now. The good thing I like about it is that it's going to give you exposure. This is where the institutional money is going to go when uranium becomes popular again. It's something that you can sleep very good at night knowing you're participating in the uranium bull market, and it's the blue chip. So I think a lot of people won't take that advice. I'm getting a little concerned. I'm seeing a lot of speculative talk on Twitter about different companies. I'm not going to comment on specific companies too much on here, but there's a lot of a lot of hyping going on. I'll just leave it at that. So I think for people that are interested in understanding and profiting from uranium investing, I think that now that the CRA case has been basically settled, you will do well if you want to participate in the upside of uranium to buy Cameco. And I think, jumping down to the last point on the slide, people are forgetting this is going to be a long-term situation ride, guys. Yes, we're up about 35% in the spot price. Yes, supply is being destroyed. Mines are shutting down, turned off, not a lot of investment. But we really haven't seen that definitive term contract that's been signed at 50 or 60 bucks a pound. We're going to see that eventually. We are just slowly, it's almost kind of mind-numbing watching people talk about, 15 or 20 cent increases in the spot price. It's just something that is going to take a period of time. You don't get into these oversupply situations quickly, and you don't get out of them quickly. So I think Cameco, I do own some of the shares as part of my own homemade ETF, if you will. But I think it's a cornerstone, and I think that you can build off it. I also think a position in uranium participation, owning the physical metal, is not a bad idea. I think institutional money is going to go there in yellow cake. Institutional money is not going to go into these different juniors, at least not off the bat. That's a playground of retail investors, punters, and that takes a lot of work trying to keep up. That's almost like a lot of the Bitcoin people. Not everybody here has all day, every day to just sit around and analyze and figure out the machinations of every single little uranium junior. So the juniors that I have in the Actionable Intelligence portfolio, they're doing very well. I look at them more as call options, and I'm not expecting that they'll necessarily even go into production during this cycle. As this thing gets going and the hype gets going and it gets really bid up, everything's going to go up. So there will be some stocks that are juniors that go up 10,000%. I don't know which ones are going to be. I don't necessarily play in that game. We try to find ones that we think are going to do well, and we do the best we can. In more news, I think it was positive this week. The Japanese announced one of the utilities that they're going to restart the Ikata number 3 reactor on 10/27. The reason this is newsworthy is because this reactor had been cleared for restart by the Japanese Nuclear Authority, and a regional government or a regional court in the prefecture that this reactor is located put an injunction on the restart. And the higher court came in and lifted the injunction, which is going to allow the utility to restart this reactor. I think this is important because it's kind of sets a precedent of other reactors that are currently being held up by injunctions by regional courts, that the top courts will come in, the top court in Japan will come in and lift those injunctions, thereby accelerating the restarts of reactors that have in fact been cleared for restart by the Japanese regulator, nuclear regulator. So I think that was an important piece of news. It was kind of out there, people weren't paying attention, but this Abe government continues to stay in power and consolidate power in Japan. They are definitely pro-nuclear. They have set out their energy policy. They want to see 20 to 25% of Japanese electricity being generated by nuclear power. Here's another piece of news which I thought was interesting. Energy Fuels, which has, I believe, the only permitted uranium milling facility in the United States, along with several different properties in the U.S., announced that they are going to restart vanadium production in mid-November of this year. They will be doing this from a waste pools that they have, that I believe the press release indicated they have over 4 million pounds of in situ vanadium that could be recovered. This is important because the vanadium price has just soared in the last year. It's up over 150%. It's went from about $9 to about $23. And you can just see what the stock price, what can happen to a stock price of a pure vanadium producer. Take a look at Largo Resources. It's up substantially. I had a position in it. I sold it out recently because I thought it was a little bit overbought, but it continues to go up. We'll have to see how your Energy Fuels is able to produce, how much they can produce, at what cost, but they certainly wouldn't be turning things back on if they didn't think they were going to be making money. I own a small position in Energy Fuels. I like the company. It's probably not going to be the top performer this cycle, but this news is interesting as they are out being able to possibly generate revenue and not have to do what the company I'm getting ready to talk to just had to do yesterday, and that is issue more shares. So going back to Energy Fuels, the reason why we're seeing vanadium really take off is twofold in my view. First of all, near-term news, Chinese regulators have told steelmakers in China to increase the amount of vanadium that they add to their alloys, of their steel alloys. Vanadium, of course, has the property that it hardens steel, and they have upped the vanadium requirement to more reflect world standards. So obviously, with the amount of Chinese steelmaking that goes on in the hundreds of millions of tons a year, you can imagine that has had a substantial effect on the vanadium price. I believe Largo Resources is the only pure play vanadium producer. So if Energy Fuels can get their act together and actually start producing vanadium at a decent rate and a decent price, it could reflect in the stock price. The other thing with vanadium is obviously, some people know my history. I do work in the renewable industry. One of the problems with the renewable industry is obviously the low capacity factors, the fact that it's intermittent power. One of the ways that the industry has looked to fix that deficiency, if you will, is to introduce battery technology. Now, batteries, like you see in the Tesla phony baloney battery project in South Australia, That's kind of a lithium ion based battery. That's just not going to be able to be worked. It works down there. It's actually is doing fairly well, but it's not a technology that's going to be able to be rolled out worldwide and to make renewables more consistent in their production. Simple fact is there's not enough cobalt. But there's a new technology that the Chinese are experimenting with at a large scale, by the way, which are vanadium redox batteries. They have several substantial advantages over lithium ion. One being that you can actually take power out of the battery while you're charging it. It lasts longer. It's more stable. So that looks like the technology that may be supplementing the lithium-based batteries for energy storage, which I believe is going to show substantial growth over the next decade. So we'll see how that works out. Interesting news yesterday. UEC proposed that they're going to raise $10 million in an upcoming public offering. You should go listen to it if you're a UEC fan. I like Amir Adnani. He's a promoter. I like UEC as a company. They have a lot of shares out. They've got a really pedigree. They had everybody on the call yesterday. They had Spencer Abraham, who's the chairman. He gave a little soliloquy. Then Amir got on. Then they brought Scott Melby. But they didn't talk about what they're going to spend the $10 million on. It was a lot of fluff and a lot of frosting about how many reactors are in the world and the supply-demand deficiencies of uranium, and a lot of information, if you go listen to it, that we already know. Nothing about what's this $10 million used for. And the only thing I can figure out is, we need $10 million. We need money to keep the lights on. That's basically what this offering's for, in my view. So, if you're a UEC shareholder or if you're interested in UEC, you should probably take a look at that. I didn't really get anything out of that 15-minute call, except a bunch of the officers of the company saying that, how prospective the uranium industry is going forward. Tell me something I don't already know, like, what are you going to do with this $10 million? So, as I've said before, you really got to be cognizant of what you're buying, understand what you're buying, understand there's going to be dilution. None of these companies have any revenue. I mean, they're waiting for a higher uranium price. Now, the good thing with UEC, as we all know, they have properties that are in layup. They, at the right price, they could be brought back on, start generating revenue and cash flow. But how many when's that going to happen? That's the question you have to ask yourself. When is the share price going to get there to sufficient level, or the uranium price going to get it to a sufficient level that warrants turning on these facilities? And how much money am I going to have to raise between then and there to keep the lights on? So I haven't been to the offices in Corpus Christi. I don't know how big their staff is. I don't know what their nut is every month. But all of these companies are kind of in the same situation. That's why I've kind of really advocated that a lot of people should be, unless you're really following this on a day-to-day basis and you're really like a portfolio manager or you really know what you're doing, you're kind of better off here, I think, at the beginning stages of this bull market, really taking a look at like a company like Cameco, which is really cheap, based on where this uranium market we think is going in 5 years, or just buying physical uranium. Yes, you should be buying some juniors, but you gotta really know what you're buying. As I've said before you buy a junior that has no revenue, how much cash do they have in the bank? And you should call them up or email their investor relations or their CEO or whoever and ask them what's the burn rate over there. How much, if a certain company has so much money in the bank, are you out spending money? Are you guys in an austerity mode and just, waiting for the price to go up, and then you're going to, start promoting the company and start doing some additional drilling or whatever your plan is? Because if you're just going to continue to issue shares, Energy Fuels did this, if you follow the history of it, people don't understand this. They issued a lot of shares. They did a reverse split. So I think a couple of them actually. So you should look at the history of these things and understand that if you have no revenue, you're existing on financings. And you can tell a good story, but in the end, when this thing kicks off and finally jumps off, what am I really going to own? I mean, how diluted am I going to be? So I've talked about it before. People get a little bit pissed off about it when I bring it up, but I would be thinking about it because this Watching the uranium story, it's going to be a 3 to 5 year story. It's not going to be a 3 to 5 month story. So, as I've said on other calls and other videos, can your management get you across the desert to the promised land, or how much shares are they going to have to sell and at what price to keep the lights on? So, some more news now, shifting over to oil. People are really not paying attention to oil. I mean, West Texas Intermediate over $73 a barrel now, Brent over 80, and nobody's really talking about it. But I'll continue to talk about it. If you look on the free portfolio, a lot of the oil stocks still haven't moved. Oil services are down 30–40%. I have, some of the, like Ensco's up decently, but, my Russian pipe making company for oil and gas is kind of not moving. It's down. I mean, some of the things I have in the portfolio, in the paid portfolio, they really aren't moving too much. But here's a article Morgan Stanley came out. Take it for what it's worth, but they see a stealth boom in oil and gas spending, which will boost service stocks. I'll put a link to the article. You can go read it. This is basically the message that I've been sending. As cash flows increase, I mean, oil companies are in the business of finding and producing oil. If the cash balances are growing, the board's going to tell the CEO to go out and look for more oil. That's just how it is. It was kind of funny during the housing boom in 2008. I was telling someone, they said, well, there's this oversupply of housing. Why do they keep building more houses? Because if you're Pulte or, one of these other home builders, you're in the business of building houses. As long as people give you money, you're going to keep building houses. What do you expect them to do? Say, well, we're just going to hunker down now because we believe there's an oversupply of houses. And, we have this huge land package that we have leased and we're trying to close on this land. I mean, that's not how things work. If you're an oil executive, you're in the business of finding and producing oil. If your board says go out and spend this much money looking for oil, that's what you're going to do. So as I've said before, as cash flows increase, we should see more exploration, and eventually the stocks will respond. Just one quote from that article: 2020 will be a year of synchronized growth in capital expenditures, and oilfield service firms will be one of the biggest beneficiaries. I think it's already happening. We're already seeing the bottom and the upturn. We're seeing activity. I really follow the news in the oil services industry. There's actually a tightness of rigs in the North Sea for heavy weather rigs. We're starting to see some other contracts being signed. So the activity is beginning to pick up. And I don't know if it'll be 2020. It might be that's when it's really hitting on all cylinders, but it's already turned in my view. There was a Wood Mackenzie report that came out talking about the lack of new finds for oil. I'll put a link to it in the show notes, but I think it's very interesting. It's basically what I've been talking about, what Goring and Rosenwag have been talking about, and other folks, HFI research on Seeking Alpha. Basically, I like some of these quotes. The warning signs are there. The industry isn't finding enough oil. I mean, guys, we're using now 100 million barrels a day worldwide. That's $35 billion, or 35 billion barrels of oil per year. We are not finding 35 billion barrels of oil a year. So I'll put a link to the Mackenzie report. I think it's interesting to read. It's pretty short. I think this is instructive down here, though. I think they're being a little bit conservative on the dates, but supply gap opens up in the mid-2020s, reaching 3 million barrels a day by 2030, 7 million barrels a day by 2035, and 12 million barrels a day by 2040. I mean, if that's the case, the world would grind to a halt. There just simply wouldn't be enough oil. And that's not going to happen. The price will go up sufficient to either stimulate finding new oil or placing the world in a position of supply destruction. That's what happened in 2008. Every rig was drilling. Every offshore service vessel was servicing rigs. Everybody that wanted a job in the oil field could get one. Oil was at $150 a barrel. I even heard Nancy Pelosi say that she was not opposed to drilling off the coast of California. When gasoline was $4.50 or $5 a gallon in California, everybody's for drilling for oil. Of course, Great Recession came and the oil price plunged to, you know, an ultimate low of around 18 bucks a barrel. And that's the oil cycle. That's how it works. Final note here from that report that I thought was interesting. More explorers need to get in on the action if the specter of peak supply is to be kept at bay. So we'll have to see how this really works out in the short, medium, and long term. Obviously, the oil price just keeps creeping up. I saw Goldman Sachs come out and say that they didn't think oil would hit $100 a barrel this cycle. I don't know. It's kind of like you just got to keep watching this and see where we're at. But it's $70, over $70 a barrel for West Texas Intermediate and $80 a barrel at Brent. That's going to stimulate people to go out and find more oil. So I think we're looking good on our oil services picks. So that's the update for this week. Let me know what you think. Thanks we have had some new Patreons come on board. I really appreciate you guys supporting me. Again, special offer still stands that if you support me on Patreon, which I think is a tremendous way to support the show, support my work. If you do $5 per month, I will send you the current pick, monthly pick, not ongoing. People have called me or emailed me and asked me, you will get the current month's stock pick from the Actionable Intelligence Alert newsletter. And that will allow you to see the type of research and the type of companies that we are pursuing. Remember, we're trying to turn $1 into 10, not $10 into $11. So we're looking for some big gains here, big moves by following blown out, burnt up industries that are going from bad to less bad. So again, Actionable Intelligence Alert comes out once a month. It's $79 per year. And if you are inclined and you enjoy and agree with the work that we're doing here and this piques your interest, then if you're interested in actually trying to make money off some of these ideas, that's the place to go. There are always links in every video about how to access. Plus, take a look at the blog. I've written some recent articles about some things going on in Mongolia and in Zimbabwe. These are other places where nobody thinks about or cares about, but they're exactly the places where things are happening and changing. And I think that there's some possibilities there. I've got some free picks that I've added to the free portfolio from those places, and I think you might find those interesting. I'll put a link to it in the show notes. All right, guys, that's it for this week. I appreciate the support. People continue to sign up. Hit that bell so that you can know when I'm putting a new show up. And I thank you for the support and the kind comments and suggestions. We'll talk to you next week, guys.